Hello everyone, Tony here. Welcome to KIS Investing. This week the market has changed. It changed a lot. We're going to analyze what changed and what effect it's going to have in our portfolios. The main change I saw this week was interest rates stopped going down, and in fact they started going up. And when interest rates start going up, a lot of things that used to work before are not working anymore, and things that didn't work will ultimately start working again or start working better in our favor. So the goal of this video is to let you know where to invest, what stocks to buy, what sectors to buy, so you can be on the right side of the trade. Okay, so let's get to it. Let's begin by looking at the most expensive, most overvalued, most hyped up, most ridiculous market in the history of the stock market. Let's start by looking at the PE ratios of the S&P 500. Before 2020, the PE ratio of the S&P went from around 14 on the trailing 12 months to a high of 22, 23, etc. But if we take a look at 2020, the stock market's PE right now is 30. In 2019 it was 20, and 2018 it was 16. And this is exactly what we expected. The market went up 100% on PE expansion. From 20 to 30, that means the stock market was 50% more expensive than it was in 2019. And now the stock market is 100% times it's more expensive than it was in 2018. How long will this continue? Who knows? But this market is getting ridiculous. Now let's take a look at some valuation metrics for the S&P 500. If you look at any valuation, price to book, price to sales, price to cash flow, trailing 12-month earnings, tangible book, adjusted earnings, whatever you look at it, it's at 100% of its historical percentile, meaning it has never, ever been more expensive than it is right now. The stock market has never, once again, never been this expensive in the history of ever. And then we take a look at this chart where we see the COVID cases just this chart looks very similar to the chart of Tesla. Tesla is up more than 600% this year, and COVID cases are just ripping higher. And you know mathematics. If one person passes COVID to two people, then these numbers that are now almost reaching 280 infections a day, we could easily go to 500, 700 a day. Who knows? The one thing is certain. With these high numbers, this spread cannot continue for many more months like this, because everybody will be infected and there will be no more people to infect, even with the vaccine. And how I look at it, every person that gets COVID is a person who got vaccinated. So actually, I think more than 200,000 people are getting COVID tested, and maybe that number is 3 or 4 times bigger because some people don't even go for a test. So let's pretend that maybe 500,000 people are getting infected every day. And so, you know, if 500,000 people get infected every day, it won't be long until everybody is exposed to COVID. Now let's take a look at what happened in the stock market this week. It's a miracle. The stock market had a flat week. The Dow was down 0.5%, the S&P was down 1%, the Nasdaq was down 1%, and the Russell, the small caps who have been ripping up higher like crazy, were up 1% for the week. And let's take a look at this year. The Nasdaq, the king of the kings, the mama of the mamas, is up 40% for the year. Yep, 40% in the worst economic year in history. 40% with the highest valuations in history, 40% with sales decreasing, 40% with profits decreasing, 40% with businesses shutting down, 40% with unemployment hitting all-time highs. Yep, this is normal. Thank you, central bankers. Thank you, Uncle Jerome. Thank you, Uncle Stephen. The Russell 16%, the S&P 13%, and the Dow 5% for the year. Now let's take a look at the sectors within the S&P 500. And this is part of what I want to talk to you about in this video. The market is changing, interest rates are changing, and the winners are going to change too. If you remember, and you've been watching these videos for a while, the XLE has been down as much as 50 to 60% for the year. Now it's only down 30%. That means it has erased almost half of its loss. And why is that? Because inflation is ripping up higher and commodities will ultimately rip up higher with them, with the exception of gold, of course. And take a look at materials, up a lot. Also, another sector who has been hammered a lot, financials, will probably see a big recovery once interest rates start going up once again. So be mindful, the stock market, what has been working before, probably won't work anymore, and we have to adapt and adjust our portfolios accordingly. Now let's take a look at the Fang stocks. Once again, Tesla, baby. Tesla is up 3% for the week, 629% for the year. Netflix had a flat week, just up 1%, but don't worry, it's still up 55% for the year, and the other Fang stocks had a very minimal down move. Even though with the risks of investigations into Facebook and Google, monopolistic practices, etc., nobody cares. The stocks are up humongously. Now, here is what I wanted to talk to you guys about. If you've been watching my videos before, I was a big proponent on buying gold and buying treasuries. Now, actually, we have to switch our minds, because when interest rates start going up, gold trends down and bonds trend down. So we must remove those two tickers from our list, and in fact, we must start shorting gold and shorting bonds on any rip higher that we can. And we must start buying the sectors that have been lagging, like energy, and start buying emerging markets like India, South Korea, Taiwan. We have to buy commodities like cow and Australia, which is a big commodity country. We have to start buying materials in XLB. We have to start buying other currencies like the Swiss franc. Why? Because the US dollar is getting punished. It's getting devalued like crazy. And we must buy technology again. Technology is going to be hot. The Fangs should be very hot. And I will be looking to buy Fang stocks in any dip. Also, China, which amazingly has almost no COVID cases. The economy is doing really great up there. Any dip in China, I would use it as an opportunity to go in and buy. So if you want to know what to buy for the end of this year and the first quarter of next year, take a look at this list. This list will give you a good idea what to buy. I did put two bond ETFs on this list, IVOL, because IVOL tends to go up with interest rates going up, and liquid, because these are the most liquid bonds, and this is a good place to keep some of your cash as a holding until you can use it in other underlyings. So there you have it. Big shift this week, big change. We're out of gold, we're shorting gold. We're out of bonds, we're shorting bonds, and we're gonna go long things that go up when inflation starts ripping up, like emerging markets, like foreign currencies and commodities. Thank you very much, everyone, for watching this week's video, where the stock market changed, interest rates changed, and our portfolio must change with it. If you like this video, consider sharing it. Please subscribe, click like, click the little bell so you can be notified when I post a new video. And also, if you want to learn about personal finance and how to become a millionaire, I have a free course, a 3-video course for free. Link below, how to become a millionaire. Also, if you want to trade using the best trading platform out there, the one that I use, Tastyworks, open your account, takes around 5 minutes, link below. It's getting crazy out there. The stock market is way overvalued and you have to be careful. Thank you very much for watching. Good luck trading, and remember, you gotta risk it to get the biscuit, baby.